Hey, it's so good to see you. Thank you so much for being here. I gotta show you this chart of SPY, daily chart, and well, it looks like CPI set a nice little bull trap this morning. Gave SPY a pretty nice gap up. Yesterday we closed at 624.8. Today we opened at 627.5. Few dollar gap up. But man, oh man, was it not bullish intraday. We can look at a 15-minute, 30-minute time frame, and it pretty much trended downwards, possibly trapping some bulls or dip buyers along the way, and it just kept on going down. Not sure if it was the tariff talk or the market starting to make sense, but like one of my favorite viewers says, it don't have to make sense as long as it makes sense. So hopefully you guys were able to attract some money with today's price action. If not, we live to fight another day. I do have some new pivot levels that I'm paying attention to. We did not get a new all-time high, close at least, but we did get a new all-time pivot high, all the way up at 627.86. So I started my fib level from the low of July 7th at 617.87, which is also the low of the weekly candle, worth mentioning, and I brought it up to today's pivot high. So I have some new pivot levels to watch out for. The most important pivot level for me right now, as far as resistance goes, is 624. It's one of the new pivot levels that I have, fib levels, but it also aligns right around with the 5 daily moving averages. That's that green line there. Now if I zoom out, you see that green line, that 5 daily moving average. While SPY has been bullish these last few weeks, you see that the price has stayed above the 5 daily moving average for the most part. Today we have an official close below the 5 daily moving average. The last time we had a close below the 5 daily moving average was back on July 8th, and we had a recapture of it the next day, which led to a little bit more upside. It did lead to a new all-time high. So we need to watch that 5 daily moving average for tomorrow. If bears are to show follow through from today's breakdown of that moving average, they need to keep price below 624. Bearish follow through would be to break down 622, 620, and 618. I would be bearish if those levels break down. But if we recapture it, there is a chance that SPY will head back up to new all-time highs, or at least retest the previous all-time highs. So 624 for tomorrow is the important pivot level. It's a fib level, but it's also based on the 5 daily moving average. Remember, SPY spends majority of the time above the 5 daily moving average when it is bullish. But when it starts pulling back, it spends more time below the 5 daily moving average. Here's a couple of examples right there. So today's close below it could be the start of a correction, maybe even a top. I don't know. I'll humbly say that I don't know. But I do know is that if we're below the 5 daily moving average or we're below the 624 level, I'm going to stay bearish. And if the market managed to pop back above the 624 level and turn it back into a buy zone or a buy area, I would switch back to being bullish. Triple Q, we had a very incredible gap up, getting everybody bullish. If anybody swung calls, hopefully they were able to take profit this morning, because it was some good profit taken back to the downside. And that 557 level, yeah, it still did not get an official daily chart close above. Still haven't closed it. But there was definitely selling pressure intraday. If there is going to be more selling pressure tomorrow, staying below 557 is a start, but breaking down 555.5, which is a fib level, would be a great follow through for the bears. Not only would that take out a fib support level, but it will get price below the 5 DMA, which would be a start that the bears really need to get a correction going. But I tell you, above 557 would give the bulls a chance, a possible chance to get that daily chart close above it. And if 557 clears, then back to 559 and 561-ish we go. Here is Tesla. Some good selling pressure today, rejected from a fib level that I have around the 320.5 level. Failed to clear the high of the doji. But speaking of the doji, it did take out the low of the doji. So this is bearish price action to me. I have a fib level at 309.3. We did not get a daily chart close below it, but Tesla's currently below it in the aftermarket. So watch that pivot level. If Tesla is above it and it clears 311 and 312.5, we can expect a bounce, a $10 to $15 bounce back to the upside for Tesla. But overall, below 309.3 is bearish. So if you're holding puts or you're swing trading puts and price is below 309.3 and you have some time on your contracts, I would keep on holding the puts. And break it down 308, 306 or lower would definitely be bearish follow through, sending us back to the downside. Most likely back below 300, because there are a lot of gaps below the 300 levels that should or will eventually get filled. So here is NVDA with this really nice gap up, but there wasn't much selling pressure. We ended the day with the doji. So how does Uncle Chartist trade dojis? Like, you always want to watch the range of the doji. The low is at 169.2. So if we break down 169.2, there's a good chance we're heading back to the downside. 166 gap fill areas around 165ish, so we could hit that level instead. 163 and 160 are also targets to the downside, but it would need to take out the low of the doji, 169.2. But if we're above 169.2, there's a good chance we're going to continue to make new all-time highs. 171, 172.5 are my resistant levels. If those clear, I would be bullish and favor more upside, no matter how much sense it does not make. Here is coin. Coin had some selling pressure, but also some buying pressure. It was a mixed day for coin. But I tell you this, pivot level, the previous pivot high from June 26, that's around 382. Not once but twice, coin tested that area and it was buying pressure, and the bulls avoided a daily chart breakdown of that level. But I'm still gonna stick by that level and say that we're gonna get bearish and favor a multi-day move to the downside. 382 and 380 are the levels that must break down to get me bearish. If we're still above 382, bulls still have a shot at more upside, but they'll need to show some follow through by taking out the 390, 393.3 and possibly all the way up at the 400 level. Those levels must clear. There was some good selling pressure around that area, as you can see with the wicks. So if we can clear those levels, I would be bullish, especially above the 400 level. But if we remember, we break down 382, which is pretty close to testing right now, we can expect a multi-day move to the downside. And last but certainly not least, here is IWM. IWM has itself an outside daily chart candle. That's when the current candle, the range is much bigger than the preceding candle. You can also consider it a bearish engulfing candle, but overall bearish. Whatever the message is, it is definitely bearish. So I do have that critical support level, fib level at 218. Let's see if the bears can show follow through and break it down tomorrow. If they do, that is follow through, put in 216, 214, 212.5 and 211 in play. We're very close to back testing that area as a support. So if there's truly buying pressure, 220 and 220.5 must recapture to put 223 and 225 in play. Above 225, I would favor new highs up to 227 in the 230 area. But remember, watch that 220, 221.5 level. Below it was overall bearish and loss of 218. We could favor much more downside. But if not, and they recapture, could be a bounce. Watch out for any potential bear traps. Guys, thank you all so much. Y'all being here means the world to me. I'd be talking to myself if you guys wasn't here. So I really appreciate you. I love you so much. Peace.